Hello traders and welcome to another video analysis. Today is Thursday, October 7th, 2021. We are going to start with the Forex calendar review. What is going on today's markets? Not too much important data is scheduled for release. During the London session, we had already a Halifax house price index increased from 0.8 to 1.7, industrial production from Germany that dropped from 1.3% last month to minus 4%. We got a trade balance, retail sales from France and Italy, but the key event here is the ECB monetary policy meeting accounts scheduled for release 1:30. During the New York session, we have some data from the labor market in form of the challenger job cuts, unemployment claims, and continuing claims. We have a IV Purchasing Managers Index from Canada scheduled for release at 4 o'clock. And then, of course, we have the EAA natural gas shortage change, which might be kind of important because of the very violent gas prices recently. This data is scheduled for release 4:30, and then at the end of the day at 9 p.m. we got the consumer credit data from the US. So not too much important data for today. No interest rate announcement, no GDP or something like this, but it looks like we might have kind of a busy day today anyway. We are going to start our analysis with a star of the recent weeks, which is the US dollar. At the daily time frame of the US dollar index, we can see the level of 94.47, which is of course the level of a high from the last day of September and the recent technical resistance. So this zone between 94.27 through 94.47 to 94.71 is the supply zone, and bulls might have a little trouble to break through that zone. However, the momentum is still positive, the momentum is still strong, and we should expect another rally to the upside. Nevertheless, please pay attention to the level of 93.70, which is the technical support for the US dollar index. As long as this level is not clearly violated, we should expect another bullish trend, uptrend continuation by bulls. So I'm gonna put my blue arrow here. There you go. This is the key technical support for the US dollar index in the near time. Because we are going to have some data from the US, let's take a look at the euro to the dollar pair. What is going on here? Well, because the US dollar index is going up, the euro to $1 is going down. We are approaching the level of 50% of the Fibonacci retracement. This level is located at 1.1497, and it looks like it will be touched soon. The key technical resistance is seen at 1.1666, and the market trades in extremely oversold conditions. Moreover, we have some kind of evidence to see the bullish divergence between the price that is making lower lows and the momentum that it's not making lower lows. So there should be some bullish reaction from 50% of the Fibonacci retracement, and please notice that this 50% is the key level, because this 50%, as you can see, is the level from the lows of the COVID lows, right? From the COVID sell-off, right? This is the 50%, so it's very, very important. Moreover, there is a technical support at 1.15, which is, of course, key technical support for the long term. So, US dollar is approaching very, very interesting and key levels. Please keep an eye on these levels as well. What is then US dollar to the Swiss franc doing? What do we have here? We have wave C top. It looks like wave ABC to the upside had been completed. Previously, we had the 100% of the extension, and it might look like this was the top for the wave C. However, another high was made, and it looks like this will be finally the top for the wave C. We have this internal trend line here that market respects and recognize. So any breakout below this level would mean the wave C top has been confirmed at this level here. That candle doesn't look very good. Long upper shadow on a daily time frame chart of this kind of a candle means that bears are preparing to break below this black short-term trend line and below the level of 9,231 and the lows of the September, which are at the level of 9,217. So please keep an eye on this level. Let me just put the last level on chart somewhere here. There you go. Any violation of this level would likely continue the sell-off towards the lower channel line and even towards the level of 9,101. We have the breakout in the momentum already. We are approaching the level of 50, which is the neutral level. So please keep an eye on the breakout below the neutral level. If there is another sell-off and RSI is below the level of 50, we have a move down confirmed by the momentum, so market would likely would go lower. What is going on the gold market? What is going on the spot gold market? Nothing much, as you can see, is going on here. We broke above the upper channel line here, above the technical resistance at 1,762, and the market is heading towards 1,780. However, the price is still trading below this long-term trend line and below the key technical resistance that is a real game changer on the gold market, 1,833. So that's the real game changer here. This long down shadows might suggest that the market is ready to move higher, but it looks like the momentum is still below the level of 50. This is negative momentum approaching the neutral level from below. So the next target, of course, 1,780, maybe 1,800 will be sooner or later tested by the bulls. However, if there is any sort of the down candle, right, or a down move, that means all of this effort is wasted, and now we will continue the down move below the lows of the September at 1,721 towards the lows of the August at 1,684. So please keep an eye on the spot gold as well. And last but not least, Ethereum market. What is Ethereum doing? As we can see, we had a very nice bounce towards the highs of the September. This, let me just put it on the chart. This high was on the level around of 3,670. So let's just make it clear that this is that level. There you go. 3,670, and this is the level of resistance for the bulls now. They are a little bit confused, but because the momentum is strong, because the momentum is positive, there is still a chance for the bulls to jump higher and break above 3,770 and hit the level of $4,000. The immediate technical support is seen at 3,358, but the key technical support in the short term is $3,176. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.